What's up with Bitcoin? It's up to 120, it's down to 105, it's up to 114 today, it's down to 109 after hours. See, Bitcoin's doing things like Bitcoin does, and you're going to find out more of what that means. We're talking wash trading, and we're talking more up-to-date news because this volatility is crazy. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Let's dive in. Bitcoin surged to 114,000 today before dropping. You see, this is the classic crypto volatility, driven largely by market makers liquidating positions of traders who are using high leverage. You need a quick reminder. Leverage can multiply gains, but it also amplifies losses. I never recommend leverage unless you are ready to lose it all, because that's exactly what the market is set up to do when things get shaky. I don't want that to happen to you. You see, these liquidations create short-term swings. But here's the key takeaway. Institutions are quietly buying while weak hands are getting flushed. Over time, this accumulation by smart money sets the stage for Bitcoin's next major rally. Historical cycles show the pattern again and again. Liquidations, accumulation, then breakout. Even during these wild swings, Bitcoin remains fundamentally scarce, decentralized, and increasingly recognized as an institutional asset. Fed Chair Christopher Waller actually spoke today and made headlines calling Bitcoin electronic gold. This is huge. Why? Because it shows that even mainstream central bankers are acknowledging Bitcoin's role as the store of value it is. You see, Bitcoin is now being seen alongside gold as a hedge against inflation and currency instability. That matters, especially in the current macro environment with government shutdowns and tariffs creating uncertainty. Remember, Bitcoin isn't just a speculative asset anymore. When global policymakers start recognizing it as a digital gold, it signals that mainstream finance is integrating Bitcoin into the broader system. And institutions, they're taking notice. Now let's talk BlackRock, the world's largest asset manager. Their Bitcoin ETP is now trading on the London Stock Exchange. This is monumental for several reasons. It gives UK retail investors and pension funds institutional grade access to Bitcoin. It confirms the institutional adoption is going global, not just Wall Street, not just IBIT here in the US. It strengthens liquidity and legitimacy, helping stabilize the market over time. You see, the ETP is fully regulated and built on Coinbase custody, ensuring security and compliance. This is exactly how the next $1 trillion enters crypto, through trusted, regulated vehicles. The ripple effect, more liquidity, deeper markets, and growing confidence in Bitcoin as a mainstream asset. This isn't hype. This is what real adoption looks like in real time. Meanwhile, on the macro side, the government shutdown continues. Current forecasts suggest maybe if it's not resolved this week, it's going over 40 days. Can you imagine that? That'd be a record in this country. That means delayed economic data, frozen federal paychecks, and uncertainty for investors across every market. Add to that the escalating trade war with China, with President Trump's tariff negotiations coming in the next few weeks. Tariffs drive up costs, push inflation higher, and force the Fed to maintain tighter policies for longer, but they could also increase GDP and be very beneficial for the country. You see, this is the backdrop for Bitcoin, or that Bitcoin is operating in, a world where governments are unpredictable, spending is frozen or inflated, and traditional markets are reactive. And Bitcoin, well, by contrast, is mathematically sound and increasingly integrated into institutional strategies. Here's something many traders overlook. Market psychology is just as important as the charts. When volatility spikes, fear spreads, and weak hands sell. That's when smart money accumulates. Look at today's moves. Bitcoin spikes, drops, liquidates, leverage traders, and still holds above 109K. That's not random. It's institutional accumulation in action. Michael Saylor once said, Bitcoin is a bank in cyberspace, run by incorruptible software. And Warren Buffett said, be fearful when others are greedy, and greedy when others are fearful. You see, these quotes perfectly explain today's environment. Fear creates opportunity, patience is rewarded. Also, let's clarify again margin versus leverage. Margin is using borrowed funds to increase your trading position, but with defined limits. Leverage amplifies exposure, but the downside is magnified, and liquidations can happen instantly. High leverage is effectively gambling. And this week basically proves why retail traders need to be extremely careful and stick to spot Bitcoin or spot IBIT. So what's the big picture? Well, Bitcoin volatility could lead to a bull run. institutional adoption continues with BlackRock's London ETP, could lead to a bull run. The government opening back up could lead to a bull run. And market psychology is very important to managing your money. So keep your eyes on these levels, and remember, patience and discipline are the best tools in Bitcoin and crypto. So what do you think? Will Bitcoin, go above 114K and continue institutional driven rallies? Or is more volatility coming because of liquidations and leverage trades? The casino's still open. Drop your thoughts in the comments. If you found value today, like, subscribe, and share this with someone who wants to know and stay on top of Bitcoin news every day. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one. Oh, and ouch to Netflix.